Welcome to today's Explainer. Today, we're unpacking a truly foundational shift in modern business. We're talking about the massive leap from those dusty, error-prone ledger books of the past to the dynamic digital dashboards we rely on today. Basically, we're going to map out the exact anatomy of a computerized accounting system. We'll explore how it processes information, how it fiercely protects itself, and the specific limbs it uses to keep a business running smoothly. It turns out that when you really look at explaining the chapter of digital accounting, you uncover this absolutely fascinating structural brilliance hidden right behind the numbers. So here's our roadmap for today. We'll start with part one, the pillars of digital accounting. Then we'll look at turning data into information, followed by the language of account codes. After that, we're going to examine system security and limitations. And finally, we'll wrap the whole thing up with the subsystems of the accounting information system. We're literally building this understanding from the foundational pillars right up to the working limbs. All right, first up, Section 1, the pillars of digital accounting, building the foundation. Every system needs a solid base, right? Especially when it's replacing centuries-old manual ledger systems. So the crucial first step is defining exactly what we're looking at here. A computerized accounting system, or CAS, is simply the processing of accounting transactions through hardware and software to produce necessary records and reports. Instead of a room full of clerks scratching away with fountain pens, this system takes your inputs, your daily business transactions, and automatically generates those vital end-of-cycle reports. We're talking your daybooks, your ledgers, and your final balance sheets. The real beauty here? It's all in that automatic generation. It's kind of fascinating to see how this entire digital accounting structure relies on 5 critical pillars. It's like a giant puzzle. If you remove any one of these pieces, the whole system just collapses. First, you have procedure. That's the logical sequence of actions to actually perform a task. Then, data, which are the raw facts you're feeding into the system. Third is people, because, hey, without users, the system just sits there doing nothing. Fourth is the physical hardware, meaning your computers and networks. And finally, the software, the programs that actually do the heavy lifting. These 5 pillars have to work in absolute harmony. Let's actually slow down for a second, because we are looking at the absolute mathematical core of the entire system. You probably recognize the classic double-entry equation. Assets equal liabilities plus capital. But a modern digital system breaks it down even further to account for income. It becomes assets equals liabilities plus capital plus revenues minus expenses. Literally every single piece of software we are going to talk about today is fundamentally designed to keep this exact equation in perfect balance as a business grows. Moving right along to Section 2, turning data into information, the digital factory. This is where we peek into the brain of the system and see how the software actually processes what we feed it. Think of your accounting software like a highly efficient digital factory. Data acts as your raw materials going in. Let's say the number of days an employee worked and their rate per day. On its own, well, that's just raw facts. But the software processes it, multiplies it, applies the taxes, and spits out information as the finished product. In this case, the exact total amount you need to pay that employee. The entire system exists to constantly transform raw data into actionable insights. Because of this digital factory process, a CAS possesses what we can honestly call system superpowers compared to the slow, manual ways of the past. The operations are simple and highly integrated across sales, purchasing, and inventory. It gives management total transparency and control over day-to-day operations. The accuracy and speed are just unerring. Once a template is built, data entry is lightning fast. It offers unmatched scalability, meaning the software grows right alongside your business volume. And finally, it provides ironclad reliability, making sure your critical financial data is consistently accurate. Okay, Section 3, the language of account codes, giving data meaning. For the system to process data with that kind of incredible speed and accuracy, it needs its own internal language to maintain really neat hierarchical relationships. To achieve this, accountants use something called codification. There are 3 main types of codes we should compare. First, sequential codes, like CL101, CL002, they're in consecutive order. A business uses these to easily trace missing documents, like checks or invoices. Then you have block codes, which partition a specific range of numbers. For example, a hardware store might use the 100 to 199 block exclusively for all small pumps, making product grouping a breeze. Finally, mnemonic codes. These use alphabetic abbreviations, like SJ for sales journals, for really quick, human-readable identification. Let's see how this actually works in a real-world scenario. Imagine an educational trust running several different schools.
They need a system to uniquely identify every single student across the entire organization. So they build a code step by step. They assign 2 digits for the specific school, 2 digits for the year the student entered, 1 digit for their academic stream, 2 digits for the class, 1 digit for the section, and finally, 2 digits for the student's roll number within that section.
So let's see how this builds in practice. Take a 10-digit number like 0608112254. Now, to an outsider, that's complete gibberish, right? But to the accounting system, it speaks volumes. Reading from left to right based on the exact rules we just built, 06 means the 6th school in the trust. 08 means they entered in 2008. 1 means the science stream. 12 means class 12. 2 is section B, and 54 is their roll number. That's 10 digits, perfectly categorized and instantly sortable by the software. Which brings us to Section 4, System Security and Limitations, the armor and the flaws. We've built this incredibly fast, highly organized digital brain, but how do we actually protect it?
It's a really critical question to ask. How does a business actually protect its most sensitive financial data from falling into the wrong hands or, being altered by a bad actor inside the company?
The answer lies in multiple layers of digital protection. First up, password security. And this isn't just about remembering your login. It's about controlling access rights, so a junior clerk can't accidentally or intentionally view the CEO's payroll data. Next is the data audit feature. Think of this as a digital footprint. It tracks exactly who made what changes to the original data, ensuring total accountability. And finally, the data vault. This provides heavy-duty security through encryption. It literally scrambles the information. So even if a hacker does manage to steal the data, they won't be able to decode or read it without the proper encryption key. But, we have to anchor back to reality here. No system is completely bulletproof, and the risks are definitely significant. There are inherent vulnerabilities. The incredibly fast obsolescence of technology means a business has to frequently reinvest in new hardware and software just to keep up. Unexpected power interruptions can actually corrupt critical data if your backups aren't immediate. The threat of hacking, that's a constant daily battle. And finally, these systems can be pretty rigid. If you need a highly specific, unprogrammed report, the system often just can't generate it unless a developer comes in and writes new code. All right, finally, let's look at Section 5, the subsystems of AAS, the limbs in action. We've looked at the brain and the armor. Now let's check out the specific limbs that carry out the daily ground-level work of the accounting information system. These subsystems handle all the incoming money. On one side, the cash and bank subsystem deals with everything from physical cash receipts in a register all the way to complex electronic fund transfers using credit cards. Meanwhile, functioning right in parallel, the sales and accounts receivable subsystem is busy recording every single sale made, maintaining the customer ledgers, and tracking exactly who owes the business money and when it's going to be collected. Then we have the systems handling the outgoing side. The inventory subsystem meticulously tracks every single item purchased and issued, constantly updating the price, the quantity, and the current valuation of the entire warehouse. Tied really closely to that is the purchase and accounts payable subsystem. This manages the actual ordering of goods and, crucially, makes sure that the business is paying its creditors and suppliers accurately and on schedule. Let's move to our final vital component, the payroll accounting subsystem. This limb handles the human element. It manages the entire wage bill, calculating overtime, basic pay, and automatically handling all those complex deductions for taxes, loans, or provident funds. It exists purely to ensure that the people, which, if you remember, was one of our 5 original pillars, are compensated accurately. And that brings us to the end of our anatomical tour. We've seen how raw data transforms into organized, encrypted, and highly actionable information. But it leaves us with a really important final thought. Technology moves extraordinarily fast today. Knowing what you know now about the delicate anatomy of these systems, is your own data actually secure against the rapid obsolescence of modern technology? Think about it. Thanks for joining me on this explainer, and keep learning.